Hello, this lesson is on the balance sheet. I'm just going to be going through the blanks that were in the lesson and explaining it in case you didn't understand while you were copying the answers. I'm going to skip the recall because we already learned this in the previous lesson, but just remember that assets minus liabilities is equal to owner's equity. So there's two new terms. There is accounts receivable or AR, and there is accounts payable, which is AP. Accounts receivable is considered an asset. If you want to put in brackets here, this is an asset. I'm just going to do it in a different color. Do blue. This is an asset. And the reason why it is an asset is because this means that someone owes the company, let's say us, someone owes us money as the company. And so it is considered a very liquid asset. And if you recall, liquidity meant how fast you can convert something into cash. So if someone already owes us money, it's almost already cash. They just have to pay it to us. So it's very liquid. And the way you know a person is an accounts receivable account is if we say they are a debtor. They are in debt to us. So you'll notice that in some accounts, like in this example that we're doing later, there's debtors after the name or creditors, and that's to tell you that it's accounts receivable. I will not tell you yours whether it's accounts receivable or not. You have to decide based off debtors and creditors. So that's an asset. Versus the flip side of that, and accounts payable means we, the company, owe money to other people or creditors, and we call those creditors. So that's why it is a liability, because liabilities are the amount owed or amount we are in debt to other people. And this is the first liability always. It's not mortgage payable. It's not anything else. It's always going to be the first liability. And we know it's a liability or an accounts payable because it will say creditor next to the account, such as here, Able Supply Company is a creditor. So balance sheets are difficult because they are not ordered in alphabetical order. They are ordered in order of liquidity. And remember, liquidity means how fast you're able to convert something to cash. So these 10 accounts are the only accounts I will test you on. There's more, but we're not going to go through those. And the actual order of liquidity is here. So bank or cash is already cash, and that's why it's always going to be first. Bank balance or bank account is your digital cash or what's sitting in your bank account. So that's pretty much cash. You just have to withdraw it. AR or accounts receivable, and you can put that in brackets. I just might receivable. That is also very close to cash. The people just have to pay us back. And inventory, if you recall, meant the product that has not been sold, that's just kind of stored at the back in the storage place. So inventory is being ready to be sold. And so that's why it's also quite liquid. And supplies are things like consumables, such as pencils, erasers, binders, paper. Those are all considered supplies, and that's also considered liquid. It can be converted into cash faster than, let's say, selling off a building. The next bits, land and building. These two go together, and then these three, I should highlight them in a different color, go together. So in the yellow, land and building are after these 5 things, but it doesn't matter whether you put building first or land first. It doesn't matter. But these 3 things here, automobile, equipment, and furniture, these 3 things must be last, but the order between the 3 do not matter. So if you had furniture, equipment, automobile, that's fine. As long as these 3 things are last, it's okay. The more important ordering is here. This is non-negotiable. This has to be the order for assets. So you may have to memorize this order. So I would just make a star or a note that you need to memorize this. Or if you practice it enough, then, you've already memorized it. So remember the assets because that's the hardest part of the balance sheet. The other order you're going to have to know is the order of liabilities. But the liabilities, you'll only have these 3 types. So I'll just write a note to memorize as well. But accounts payable is always going to be the first liability, followed by the bank loan. And the reason for that is because I will be able to pay off my accounts payable faster than my bank loan because these are to individual people or companies. The bank loan is usually for something bigger, like maybe there's a expensive piece of equipment. And then mortgage payable is probably the last thing. Like maybe you've heard, you don't pay off your house until 30 years, and that's because it's off of a mortgage. It's a property, a building, or a piece of land. So it's much more expensive and much harder to pay off faster. So this is the order for liabilities. Now we're going to try to do a practice balance sheet together. And in this case, we have Kate Kramer is the owner of the Kramer Company located in Kingston, Ontario. On December 31, 20-, the Kramer Company had the following assets and liabilities. Prepare the December 31st balance sheet for the Kramer Company. Okay, so the headings of balance sheets are the same as the headings of income statements. So you should be able to do that fairly easily. So we have our balance sheet, and it looks a little bit different from the income statement. You now have kind of a blank column, and then the digits column, and then another blank column and a digits column. And that's because a balance sheet is in showing that the figures of total assets is the same as the figure of total liabilities and owner's equity. So in the lessons before, we always put the things we own or the assets on the left side and the things we owed and the capital accounts on the right side. So let's do our heading first because we should know how to do that. The first title is always going to be the company name. And in this case, the company name is the Kramer Company. I'm going to write that in. And if you want to label it that this is the company name, you can do that. And anything I'm writing in red is not actually supposed to be there. It's just notes on the side. The second line is always the type of financial statement. In this case, we are doing a balance sheet. So I need a capital B, A, L-A-N-C-E. Spell it correctly, please. Sheet. S is also capitalized. And the last bit is the time period or the fiscal period. In this case, balance sheets are not ranges of time, like in an income statement is for the month or for the year. Balance sheets are a snapshot on that particular day. So we write capital A as at December 31, comma 20 dash. So that means as of or as at December 31 of the year, I took a snapshot of the company and that's what it is. That's how many assets we had. That's how many liabilities we had and so on and so forth. Okay, so just like we did in the income statement, we are going to start off with our first heading, which in this case is assets. So I write assets, and because it is a heading, I'm going to underline it. And on the other side, it's going to be liabilities as my other heading. And I'm going to underline that. So that should get you started. Here comes the difficult part. It is the ordering of all of these accounts. I'm just going to zoom in here for now. And we need to identify what is an asset and what is a liability. And then once we've done that, we have to figure out what the order is. So cash on hand, cash is an asset. So I'm going to write an A there. Bank balance is the same as the amount of cash in your bank account. So that's also an asset. Joe McAllister is a debtor. And debtor, if you remember from the lesson, meant an accounts receivable bit up here. So if it's a debtor, it is considered an asset. It's accounts receivable. So I'm going to write AR on top just so I know it's an accounts receivable and it is an asset. And this is also a debtor, so this is AR and it is an asset. Supplies is an asset. The pencils, erasers, paper. Creditors was the opposite of debtors. So if this was AR, then this is going to be AP. Accounts payable, which means it is a liability. This is also a creditor, so that's AP. This is a liability. Bank loan means we owe the bank money, so that's a liability. Inventory was an asset because that's the stuff we have not sold yet. So I'll put an A there. And furniture and equipment we own as well. So I'm going to put an A for furniture and equipment. So I have correctly identified what's an asset and a liability. Now I have to determine the order of liquidity. And again, that means how fast you can convert something to cash or how fast you can sell off your assets. So cash on hand is cash. So that's going to be number 1. Bank balance is kind of cash. It's just digital cash. So that's going to be number 2. I don't have accounts receivable. That's almost money. They just have to pay us. So that's going to be number 3 and 4. Now the question is, what order do I have to put the AR accounts? And this is where AR and AP gets a bit tricky. So I'm just going to make a note here. So accounts receivable and accounts receivable and accounts payable are in alpha order. But there's some caveats to it. Number 1, if it's a person, you take the last name first. So it's like the first initial of the first name dot last name. And you're going to be looking at the letter in the last name only to determine if it's alphabetical order or not. And then if it's a company, then you just take the full company name. Use full company name. So in this case, Joe McAllister is a person. I have to look at that last name, which means I actually care about the M in this case. And Terry Zach Inc. Inc. is incorporated. That means it is a corporation. So this is a company name. I am going to care about the T. So M comes before T. So this is going to be my 3rd asset. And this is going to be my 4th asset, all under accounts receivable. And I'll just put accounts payable in blue, just so, because I color coded it that way. The next one, if we look back at our notes, supplies was next. So I'm going to label that as number 5. Oh, no, I'm sorry. It's not number 5. I forgot about inventory. Inventory is number 5. That stuff is ready to be sold. It's sitting in the back, waiting to go back on the shelves. And then supplies like the papers and pencils, that's going to be number 6. We don't have any land or buildings, so I'll skip that and we go straight to furniture and equipment, which is number 7. So I've got my order of assets now. Let's just quickly do my order of liabilities. Because these are both AP accounts, they follow the same rule here. So Able Supply Company is a company, so I care about the A. Charles D. Gregg is a person, so I will care about this G, which means Able will be the first liability, Charles will be the second liability, and bank loan will be the 3rd one. And I don't have a mortgage payable to worry about, so I will leave it at that. So now when we go back into our balance sheet, I'm going to copy my asset ordering, but accounts receivable gets a little bit more detailed. So bear with me. So cash on hand is 100% first, and that's all the way left alignment of the left margin. So cash on hand, and notice I'm using capital C's, capital letters for the first of all of them. Bank balance would be next. Capital B, capital B. Okay, now accounts receivable. I must write the heading, or the subheading, I should say, accounts receivable, and be sure you're spelling receivable correctly, I before E, except after C. Once you have accounts receivable, you must have an indent, meaning I am not starting on the left. There is going to be a space that I'm leaving. And then I put my individual accounts receivable accounts. So I'm going to take the first initial of Joe, which is J, period, McAllister. That is the first person because the M comes before the T in Terry, Zach, Inc. And please leave that space. It's easier to read what the accounts receivable accounts. That's what the indent is for. I don't have any more accounts receivable accounts, so I'm going to go back to the left margin and keep it flush and write my next account, which is inventory. Please do not continue indenting. Some students, instead of writing it here, they write it in line with the accounts receivable. That's incorrect. Accounts receivable is done. I now go back to being flush with the left. So I'll just make a note of that indent actually, in case you're not sure. This was an indent, or leave a space. Leave a space for AR accounts. Okay. So inventory was next. Check. Supplies is after that. And then furniture and equipment rounds it out. Oops, I should write the full and. I almost got lazy there. Furniture and equipment. Okay, now you might think, ooh, let's write total assets right now. You're not going to write total assets yet. And the reason for that is because if you remember at the beginning of the net worth lesson, I had given you a sample balance sheet here. And when you, enable editing, and all balance sheets, when they're in this particular format, they always have total assets on the same line as total liabilities and owner's equity. And the reason for that, and the reason why it's called a balance sheet, is because total assets will always be the same number as your total liabilities and owner's equity. And that's how you know they balance. That's how an indication that you did your financial statement correctly. So because they always have to be on the same line, this cannot be up here and this is down here. Some students wait until they have finished writing the liabilities on the other side in the owner's equity section. Other students immediately write total assets down here because they know I will never give you like a balance sheet that's not enough space. So they'll know the last line is the very spot that you can write it in. So if you choose to do that, feel free. I don't like the look of it, so I'm not going to do that. I'm going to wait until I finish off my liabilities section, but that is a preference that is up to you. So let's move on to the liabilities section. You could fill out your numbers too if you wanted, but I like to do the accounts first. So my first liability account is always, assuming I have accounts payable, is going to be accounts payable. And you can bet that on this course, I will give you accounts payable. So accounts payable is just like accounts receivable. I got to format it the same way. Able company is my first one. I have to indent, leave a space. Do not make it flush with the left. And I will write able company, able supply company first because of the A, and then the person is C.D. Greg. And two first names. And then I go back to being flush with the left margin. In this case, it's more in the middle, and I write bank loan. That was my last liability. And because that's my last liability, I am going to write total liabilities. And I will have to get that number when I do my accounts. After total liabilities, you're going to skip a line, and this section of the balance sheet is never going to show up as the list of accounts. You are going to have to remember this section, the owner's equity section. That is the last one. We are going to underline it. And you may wish to make a note, so I'm going to write it in red. Don't forget this one. Many students do, or they get stuck in the balance sheet and they don't know what's missing. So don't forget owner's equity. And owner's equity takes the owner's name. There's only one account in for this introduction course. So the owner in this case is Kate Kramer. So I'm going to format her name just like I did for accounts receivable if it was a person. I'm going to say K. Kramer, comma, capital. And that is the capital account, or the money left after you've paid off all your debts with your things that you own. And then that's my last one. I can write, I see that I have one, like a blank line all the way across. So I can write total assets here because it lines up with this one, which is total liabilities and owner's equity. And you may need to write small to fit it in. If you can't fit it, you can just put it on the second line. And I'm going to write my total assets on the other side. And if you would like to make a note, these guys must be on the same line. So I highlighted it all the way across because it must be on the same line. And then you're going to fill out all of your numbers. And I'm just going to do that real quick. And then we'll talk about the capital number. I got cash on hand, bank balance, accounts receivable. You're going to skip. You're going to write in the numbers for the particular accounts receivable ones. So J. McAllister was 1,100. So please skip that accounts receivable subheading and go directly to your individual accounts receivable accounts. And then keep writing in the numbers. So I've put all my numbers in. I totaled my assets. In this case, I got 39,100. And because I added them up, I need my equal sign underneath that last asset account. And because this is the last figure on this side of my balance sheet, I am going to double underline my total assets and make sure your double underlining and equal signs are visible and obvious. You may choose to use a ruler if you want. Same thing on total liabilities. I added up 740 plus 3,000 plus 10,000. I need my equal sign underneath the last account. And I got my total liabilities of 13,740. Now, you have to calculate the capital account or the owner's equity account. And you do that by using the formula. I'm just going to draw an arrow here. This is assets minus liabilities. So in this case, that's equal to your 39,100, subtract the total liabilities of 13,740. And you should have ended up with 25,366. So I'm going to write that number in, 25,366 and no cents. And now for total liabilities and owner's equity, I'm taking total liabilities plus the owner's equity account. So I will put my equal sign and I'm going to add those up. So 13,740 plus 25,366 should equal 39,000 Oh, sorry, that should be a 6. 39,106, sorry. So 39,106. And if you get a different number when you add it, that means you did something wrong. It has to balance, hence a balance sheet. And that is our final figure. So I'm going to double underline it. And we're almost done. Almost done, I promise. You just need to put your dollar signs. So the dollar signs follow the same rule as the income statement. I need the first of each column. So here's the first one of this column. Here's the first one of this column. And you need it for all totals. So total assets gets 1, total liabilities gets 1, and total liabilities and owner's equity gets 1 as well. So that's a total of 5 dollar signs for the income statement, for the balance sheet. And you just completed the balance sheet. It looks exactly like this, and formatting is important.